Have you ever wondered how people make money by just sitting at home and clicking on their phones or laptops? Or maybe you've heard the word stock market on the news or from some friend who suddenly started acting like a financial genius. But deep down, you're still not sure what the stock market really is or how it actually works. Well, you're not alone. Today, we're going to uncover the stock market mystery in a way that's so simple. Even if you've never heard the word stock before, you'll totally get it. So stick around till the end, because this could change the way you think about money forever. Let's start with the basics. What exactly is the stock market? Think of the stock market like a big online store. But instead of selling clothes or gadgets, this store sells ownership in companies. Yes, real companies like Apple, Amazon, or even local businesses in your country. When you buy a stock, you're not just buying a piece of paper or a number on your screen. You're actually buying a small part, a share, of that company. That means, technically, if you own even one share of Coca-Cola, you're a part owner of Coca-Cola. Cool, right? Now let's understand why companies sell their shares. Imagine you want to start a business, maybe a new app or a cool coffee shop. But you don't have enough money to do it all by yourself. So, what do? You ask other people to invest. In return, you give them a small part of your business. That's exactly what big companies do. They go to the stock market to raise money from the public. And in return, they offer shares. This way, companies get the money they need to grow, and investors, that's you, get a chance to earn money if the company does well. Now here's the interesting part. How do people actually make money in the stock market? There are mainly two ways. First, the price of the stock goes up. Let's say you bought one share of a company for $10. After a few months, that company becomes more successful, and the value of your share rises to $15. If you sell it now, you make a $5 profit. That's called capital gain. The second way is through something called dividends. Some companies share a part of their profits with their investors. So if you own shares, they'll give you a small payment every few months or once a year just for holding the stock. That's like being rewarded for believing in the company. But wait, it's not always sunshine and rainbows. There's risk too. Stocks can go down. If you buy stock at $10 and it falls to $6, you're losing money unless the price comes back up or you sell it at a loss. So the stock market is not a magic money-making machine. It's a place of risk and reward. Now you may ask, but who decides the price of a stock? That's a great question. The price of a stock depends on supply and demand, just like anything else. If a lot of people want to buy a stock, the price goes up. If more people want to sell it, the price goes down. This buying and selling happens through stock exchanges like the New York Stock Exchange, the Nasdaq, or in India, the NSE and BSE. These are like the marketplaces where all this trading happens. And guess what? You don't have to go anywhere. With just an app or an online account, you can buy and sell stocks from your phone. Now here's a secret most beginners don't know. You don't need to be rich to start investing. Even with a small amount, maybe $10, $50, or 500 rupees, you can start owning real companies. Yes, real ownership. Isn't that better than spending money on things that disappear? Instead, you're putting your money to work. Let's go deeper. Who are the players in the stock market? You have retail investors. That's people like you and me. Then you have institutional investors, big companies, banks, hedge funds. They buy and sell huge amounts of stocks, and their actions can sometimes affect the market. Then there are brokers. They act like the middlemen between you and the stock exchange. When you place an order to buy a stock, your broker does it for you for a small fee. But here's something that makes the stock market even more fascinating. It's not just about numbers and charts, it's about emotions. Yes, emotions play a huge role. When people feel excited or hopeful, they buy more. When they panic, they sell. That's why the market sometimes goes crazy, even if nothing major has happened. So understanding human psychology is just as important as understanding numbers. Now you might be thinking, is it gambling? Well, not really. Gambling is based on chance. But investing in the stock market is based on research, knowledge, patience, and smart decisions. The more you learn, the better your chances of doing well. And don't worry, you don't need to become a finance expert overnight. There are tons of resources, books, videos, and apps to help you. So, what should you do next? First, understand your goal. Are you investing for long-term wealth? Saving for a dream home? Or just curious to try? Start small. Pick companies you understand, ones you use or trust. And most importantly, never invest money you can't afford to lose. Because the stock market can reward you, but it can also teach you tough lessons. Now here's the real truth. The stock market is one of the greatest tools ever created for building wealth. But most people never learn how it works. They either fear it or ignore it. But you, now that you know the basics, have a chance to think differently. You don't need to be a genius. You just need to be curious, consistent, and smart with your choices. So, are you ready to step into the world of the stock market? Because this is just the beginning.